Well, today we have the Build Back Better Act. And again, there's all kinds of trial balloons that are going up in terms of what to do, what to do. Raising marginal rates, that's been talked about. Changing the taxes for those people that earn over $1 million, changing it to those earning over $10 million, putting additional stacked taxes, raising the capital gains tax rate on people, lowering the estate tax deduction. We've talked about doing that. We'll talk about estate taxes, raising corporate income taxes back to a 35% rate. And then lastly, creating a minimum tax for corporations. Some corporations take an aggressive stand or aggressively use the tax code to avoid paying any income taxes. A company that probably all of us use, Amazon, does exactly that. They use the tax code to basically not have to pay a corporate income tax. Congress has talked about eliminating that provision and raising that. The reality is corporations don't pay corporate income tax. Consumers pay corporate income tax. It's part of the cost of goods sold. For instance, if Coca-Cola makes a can of Coke for 79 cents and assume that all of that is profit, and there's a 21-cent tax or 21% tax, the 21 cents that's added onto that brings the cost of that can of Coke up to $1. That's what we pay, is $1. So the taxes are built into the cost of goods sold. So when you hear politicians talk about corporations paying their fair share, well, corporations don't pay taxes. It's included into the cost of goods sold. In other words, included into the cost of the goods and services that we buy from those corporations. So we pay corporate income tax. It's just built into the price of what we pay. So kind of enough on that. So there's tremendous pressure to raise revenues, which means raise taxes. The details, we really don't know. We don't know what those details are. The fascinating thing about it is the math really doesn't seem to work out. There's talk about raising taxes on the top 1% and lowering taxes for the 99%. But the reality is the taxes on the top 1%, which works out to be about 1.4 million households. So that would reflect what the top 1% would be. If you raised their taxes $55,000, which is kind of what they're talking about. Simple math, multiply 1.4 million times $55,000, and you get $76 billion. Well, $76 billion in new revenues does not seem to equate with 1.5 billion in build back, or 1.5 trillion, excuse me, 1.5 trillion in new spending. So we don't know what those details are going to look like. We do know that there's going to be some pressure on raising taxes, but raising taxes on the top 1% won't cut it. And you've probably heard people talk about that, but there's just not enough. The math doesn't seem to work. Math has never been a strength of Congress, especially in terms of balancing budgets and spending and revenue. So we all know that. So they've talked about raising the marginal rates from 37 to 39. Could happen. That'll change things a little bit. They've also talked about raising the Social Security threshold. So right now, if you're if you have high income, you don't pay taxes over a certain level with Social Security. So if they were to eliminate that, so that you paid Social Security taxes on all of your income above, and I believe it's 130, 131, that would raise some tax revenues, but it would be revenues to fund Social Security, not fund other spending. So it would help the Social Security system become more solvent, but it's not going to help in the solvency of the other spending. So I just find it interesting that the SALT tax repeal really benefits the wealthy. It benefits the wealthiest people out there that have high state income taxes and high property taxes. So just interesting. So we thought that we would have clarity about this when we decided to offer this to our clients. Unfortunately, things are still pretty murky.